Hey, Dan Passarelli here. It seemed like sort of a bit of a nothing day today. A little higher volume than we've seen. S&P 500 down about 0.5%. So I was looking for some interesting things today. And to me, one of the most interesting things that could be a big deal going forward is this chatter from the White House about a 10% stake in Intel. So both Trump and Lutnick have been talking about this, and there were some headlines on it today. Lutnick confirmed that the U.S. does indeed seek a stake in Intel, 10% stake, with no governance rights. So is it full nationalization? No, but they're taking an interest in it. Because, of course, chips are important to national security. And so that makes me think a lot. They're possibly throwing Nvidia a bone by letting them sell a lower grade version of their newest, hottest, bestest chip to China while paying a 15% tariff on profits, or somebody's paying it. And so that's pretty interesting because they're not necessarily partnering up with Nvidia, but they're partnering up potentially here, and it looks like they will be, with Intel. Now, Intel has had its share of problems over the last many years now. This is just the 6-month chart. Let's take this out to more like 10 years. And you see back in April of 2021, this was like a $60-some stock, almost a $70 stock. The problems stem from even more than 10 years ago. And they've just been trying to get it right. And their latest CEO has a great deal of international experience, but that's one of the things that Trump was talking about, that there could be some conflict of interest, that he's worked with some of the Asian governments. So taking a stake here, I think even if they have no governance rights, like apparently to vote on certain things, they're still going to be the biggest shareholder. They're going to have a great deal of influence in the company. And they want that for the grants that were promised to the chip makers, including Intel, to be able to turn that from just here's a bunch of money, do what you want with it, because we all know how that works out in the long run, right? To here's some money, but it's actually an equity stake. And so if the money that they're giving to these chip firms, Intel to start with, is an equity stake, even if they have no governance rights, they're still going to have a vested interest, not just from a national security standpoint, but also from a financial standpoint. And so this could put a floor on the price. Now, you can look at it from the other side as well. What exactly does this equity stake look like if there's no governance rights? It's apparently not just buying shares, because that would come with voting rights, if that's what they're talking about. And if it was just shares, if they're buying shares in the open market, that's one thing. But if Intel would be creating new shares for them, that dilutes their shares, and that would weigh on the stock price. So we definitely need a little bit more detail here. It becomes more likely that Intel would be getting more contracts, etc., because the government has vested interest in them being profitable, and they're the ones dishing out the government contracts. And so if the government doesn't give other contracts to firms like Nvidia, who doesn't build their own chips, those chips are built by Taiwan Semiconductor or in Korea. If they make deals like this for equity stakes with Intel, but not like Nvidia, that could kind of change that whole pairs trade relationship between the two. And it would put upward pressure on Intel shares and downward pressure on Nvidia. So we're going to have to wait for some of these details to come out. But for my money, I think that being long Intel, or at least being short out of the money puts in Intel for the long run, cash secured, that could be an interesting way to go. Hope that helps. This is Dan Passarelli, Trade Smart.